Hey there, community bankers. Welcome back to the Correspondent Podcast from Independent Correspondent Bankers Bank. I'm your host, Madison Kaplinger, Marketing Specialist for ICBB. Our annual credit conference, New Frontier, is coming up in May in Lexington, Kentucky, and we couldn't be more excited about it. Before that happens, I want to give you a taste of what to expect. Joe Pigg, Senior Vice President and Senior Counsel for the American Bankers Association, will present a session on CRA and ESG for community banks. We asked him to give a preview of this session here on the podcast, and I think once you've listened, you'll be booking your conference ticket ASAP. Please welcome Joe to the podcast. Hey there, community bankers. I'm here with Joe Pigg, Senior Counsel for the American Bankers Association. How are you doing today, Joe?
I'm great, Madison. How are you?
I'm good. Thank you so much for being on the podcast today. I'm really looking forward to your session at our credit conference in May. So to start out, for those who may not know of you, just give us a brief introduction, a bit about your professional background, and that kind of thing.
Sure. Well, thanks for having me. I'm looking forward to joining you in person in May. I'm Joe Pigg. I'm a Senior Vice President and Senior Counsel with the American Bankers Association. I've been at the ABA a long time, over 25 years. I have a fairly wide-ranging portfolio, but it includes what we're now referring to as our sustainable finance work, as well as focus on housing finance, GSEs, and the federal home loan banks, among other things.
All right, very cool. That sounds super interesting. So you're going to be talking about ESG and CRA and that kind of thing at the credit conference. So just give us a brief overview of what you'll be going over and what
Sure.
your session will cover.
Yeah, well, both of those topics, both ESG or like I said, as we're more commonly referring to it now, sustainable finance, and the Community Reinvestment Act are, like a lot of things, undergoing a lot of changes. We're only a couple of months into the new administration, but lots of changes associated with the change in administration and just the way that we're approaching those issues, both from a regulatory perspective and as the industry is approaching them. So in the area of sustainable finance, I'll be talking about how banks are viewing that, how they're navigating the expectations of their customers, their investors, if they have them, and how to talk about sustainability in a way that meets those needs and expectations, but also doesn't run afoul of some of the politics. We've seen a lot of pushback from this administration, not as much with regard to sustainability and ESG as there have been around some of the diversity issues, but I see those as somewhat closely related, that there are tripwires there. I'll be talking about why we call it sustainable finance instead of ESG. ESG, environmental, social, and governance, is something of it's kind of an empty term, and it allowed people to project their own expectations onto it, when in fact those might not be what banks were really talking about. So I'll talk a little bit more about why we think sustainable finance is a better way of describing what banks are doing in this area. And then on CRA, I'll be talking about the changes that we're seeing, some of which are very recent. Hopefully, by May, we'll have a little clearer view of the path forward on that. But just last Friday, the regulators announced that they would be withdrawing the current CRA proposal that's on the table and going back to either the old rules or a slightly improved version of the old rules. So I plan to talk a bit about that and where we see that going and what the implications are for banks in that space. So that's a little bit of a snapshot.
Yeah, thank you for that. And I think, some of the changes brought about by the new administration makes your presentation especially timely to navigate what some of those expectations are on both sides for banks, on the side of their customers and, the sides of regulators and the politics of all of that, which leads very well into my next question. So, how do you think recent regulatory changes have impacted community banks' approach to, I'll call it, sustainable finance, since you did, and
Sure, sure.
compliance?
Well, I think it's interesting. Um, the the whole ESG or sustainable finance area has not had as much regulation per se as we see in a lot of areas of of banking generally. Obviously, just to contrast it with CRA, there are very hard and fast rules around CRA and lots of compliance things that you've got to check the box on. Um, for the sustainable finance or ESG, there has been less, at least at the federal level. Even the Biden administration had some expectations in that area, but they never got necessarily translated into hard and fast rules. We've seen, sort of the mirror image of that with the Trump administration, that they have an expectation, I think, or the tripwires, or maybe how you talk about that. But what holds true, I think, for the industry, whether it's the Biden administration or the Trump administration or any other administration, is that while ESG is a term that could mean different things to different people, sustainable finance and banks' approach to sustainable finance is something that banks have done at their core for all of their existence, managing risk, ensuring that they're meeting the expectations of their customers, their communities, and their business plan is something that banks always have done. You don't want to be unsustainable in your lending, because if you are, you're not going to get paid back. And so you want your customers to have a sustainable business plan and a sustainable ability to repay their loans. So that's, built into the DNA, but I think the politics of it have made it seem like, oh, it's something new and maybe something foreign, or something that we have to watch out for, when in fact what we have to do is be better about how we talk about it and make sure that people understand, especially policymakers, understand what it is that we're talking about when we're talking about sustainability.
Absolutely. And you've made a very good point. That's a bit of a soapbox of ours at Bankers Bank, about community banking and, how we are trying to do what's right by our customers as an industry, just as a rule. But I think, like you said, when you say things like ESG, it means different things to different people, and it can be kind of an empty term. But I think it's one that's often associated with like larger financial institutions with more resources to, dedicate to initiatives with letters.
Mhm.
So why can you explain why community banks should care about sustainable finance or ESG or whatever you want to call it?
Sure. Well, and I think you're exactly right. As what we've seen over the last number of years, um, the ESG focus did seem to be associated with big banks, because big banks, in fact, and not just banks, but big financial institutions, big companies, made a big show of it, right? Of their efforts, net zero commitments or pledges, or different things like that. Um, they had resources to devote to that, including to their communications. But for banks of all sizes, this is alluding to what I said earlier, sustainability is built into the bank's business model, whether they're talking about it as an environmental aspect, or if it's something that is more localized. I always say sustainability, even though ESG can mean different things to different people, sustainability can too. Sustainability to a bank in the oil patch means the sustainability of jobs in that community. just as much as the sustainability of the environment. So again, it really depends on your business plan. It depends on your customer base. But again, it's at the core of it is what is sustainable for the bank and its community, and meeting those needs in order to make sure that you're in it for the long haul.
Yeah, absolutely. And I think you've hit on something important there, making sure that you're in it for the long haul. But, the bigger banks aren't necessarily the only ones, engaging in these kinds of initiatives. They're just and practices. They're just advertising it more. So, community banks tend to have, fewer resources and things like that, whether that be budget or people. But what are some practical, scalable, sustainable finance strategies for community banks who are dealing with limited resources?
Well, at the very core, and I think this is important for banks of all sizes, but especially important for a community bank, it's to know to know your customers, to know what's important to them, to know what's important to your community, to do that assessment of where you should be putting your efforts, um, and then thinking carefully about how you want to communicate those efforts, because what can sound great to one constituency may flip some, cross some tripwires for another, whether it's the state legislators or others. We've seen because policy here doesn't just come from the federal government. We've seen a lot of states get into this space and and pass anti ESG laws, or regulation, because they're talking about, oh well, you're focusing on this, you must be debanking someone. Well, banks banks want to bank customers. Banks want to, we want as many customers as we can get. Nobody's looking to cut anybody off. Generally, when a bank decides that they don't want to do business with someone, it's because they're a bad credit risk, or because they don't have the expertise. You can have a customer that comes in that maybe wants to do something that's in a very, very complex technical field, and you as the bank just don't have the resources, the staff to approach that. So you want to explain to them that that's why. And I'll tell you, Madison, every banker I've ever talked to, when they're faced with that situation, they help that customer find a bank that will do business with them. They don't just tell them, sorry, and turn around and walk out the door. They want to build those relationships, and even if they can't meet their needs, they will help them find other financing. So it's really, I've gone off on a tangent here a little bit, but it's to make that assessment of who your customer is, who your investors are, who your community is, and then how best to communicate the decisions that the bank is making uh, in regard to those issues. And I think that's certainly true for sustainability. It's probably true across the board, whether it's housing. A lot of banks have left mortgage lending, direct mortgage lending, just because the profit margins were so thin, the competition was so fierce. Doesn't mean that those banks aren't committed to their communities. It just means that they might be serving those needs in other ways, through warehouse lines, or through community development grants from the federal home loan banks, things like that. But you have to communicate that, or people get the wrong idea.
Right, absolutely. And lucky for you, Joe, this is a podcast, so tangents are always acceptable. Um,
Glad to hear that.
yeah, and if we and if they're too terrible or too long, we can edit them out, of course. But no, yours was good. And you made several good points at once. But one of them was how what sounds great to one constituency might not sound so great to another. They might have reservations or concerns, which I think we're seeing play out everywhere in policy decisions. But another kind of level of that is that as soon as you start, talking about these types of initiatives, there's always groups within banks that tend to get a little concerned, compliance operations, get concerned about, overburdening their staff. So how can, banks integrate some of these considerations and initiatives into their lending and their investment decisions without overburdening their operations?
Yeah, that's a very good point. Um, and it's especially important if you're going to be making some ESG commitments. You want to make sure that that you can back up what you're committing to, and so there has to be um, that coordination between the communications or the marketing department and the compliance and legal, and because you just really that there have been, and this is I think truer for larger institutions than smaller ones, but it's easy to fall into a trap where you get accused of greenwashing and saying that we're doing more than we're really doing, and so you can avoid that by making sure that the compliance folks know what the communications folks are saying we're going to do, and not just talking the talk but walking the walk too.
Yeah, yeah, absolutely. I think most banks will, submit their communications and their marketing to compliance. I know that I do, but I know that's a relationship that, I mean, I think every bank should have, especially going forward, as these regulations change so quickly and seemingly so often.
Yeah, and
So
I'm sorry to interrupt, but
no, go ahead.
we ABA does a survey of sustainable finance survey, and one of the questions we ask is, where do you house your sustainability or your ESG function? And a lot of them, it's especially in community banks, it's housed along with the CRA component, which makes a lot of sense to me, because that is an area where it is heavily regulated, it is heavily examined, and there's a lot of overlap of sustainability and community investment, community reinvestment. Um, I think that's a smart place for it to be housed. I've heard of banks that will house it in communications, and that always worries me just a little bit, because I think, it's great to tell people what you're doing, but make sure that you are actually doing it too. And that's where the compliance and legal teams need to be involved.
Yeah, I mean, it sounds like, I mean, even outside of, ESG, sustainable finance, there's a lot of other reasons for this too. But, for these initiatives especially, banks need to be breaking down whatever silos might exist between their departments and just making sure everyone's on the same page and really building some synergy between each other so that they can actually accomplish some of these things.
Yeah. Yeah. I mean, most community banks have a great story to tell. You just want to make sure that the story that you're telling is, is accurate. Because there's
Yes.
no need for hyperbole. There's no need, because really for whether it's investors or regulators or just customers, most community banks are going to hit the mark. They just have to talk about it in the right way.
Yeah, absolutely. So I have one final question for you, um, before we end here.
Yeah.
That's this type of question tends to make guests a little nervous because I'm asking you to look into a crystal ball just a little bit, as much as you can. But how can banks proactively prepare for future changes in sustainable finance and even CRA requirements?
Oh, well, it doesn't make me nervous. It just makes me confused, I think. We're living in such a fast changing environment. Um, the thing that I think is um, that a bank can do to be most prepared is to be ready to be quick on your feet, but to stick to your core principles. Again, this is built into the DNA of most banks, and most community banks especially. So you might have to change the way that you talk about it, because the expectations might change, let's say on the regulatory front. But it doesn't mean that you stop doing it. It might mean that you just explain it differently. Um, and, we've seen that change happen quickly just in the last year with the change in administrations. But that hasn't changed, I think, what most banks are doing in this space. It might change how they talk about it and what they emphasize. But at their core, they're still doing the same things. They're still making loans and investments that make sense for their business plan and for their customers.
Right. Absolutely. Well, Joe, thank you so much for coming on the podcast to, share with us about sustainable finance and a little less about CRA, but I guess we'll save that in light of the recent changes for your talk at the credit conference. I will throw in one more thing here. For those listening, why should they come to your credit conference session?
Well, I think you hit on it just a moment ago. We're living in a very, very fast changing environment, and I think it's going to be important to stay up to date on what's happening. I mentioned that I'm not the team lead on CRA, but we have my colleague Krista Shank, who is a brilliant resource on CRA. I'm going to be talking with her extensively before the conference. I'm going to be making sure that I'm up to speed on all of the latest developments in sustainable finance. And so it's a way to, one-stop shop to make sure that you're up to date. And maybe maybe my crystal ball for 6 months down the road will be clearer too. But I think it can give you some good insights. At least that's my goal. I hope to provide that when I see you all in May.
Awesome. Well, you have me convinced at least. So thank you again for coming on the podcast, and I'm really looking forward to your session in May.
Thanks. Looking forward to seeing you.
Thank you for listening to the Correspondent Podcast from Independent Correspondent Bankers Bank. We hope you've heard something that you can take back to your community bank. Be sure to follow us wherever you get your podcasts. If you're listening on Apple Podcasts, leave us a rating and review, or on Spotify, turn on the notification bell so you never miss an upload. See you next time, community bankers.